Hey guys, in today's video I'll be covering another technical analysis chart pattern, this time wedge and triangle formations. As always, I'll cover exactly what they are and we'll look at how to trade a breakout of a wedge and triangle formation. So let's get to it. So a wedge and triangle formation is where price action and volatility begins to narrow before a big movement happens in price. A wedge formation can be bullish or bearish, it really depends on which side of the wedge price breaks from. Now I've got an example here using the silver chart. This is a daily chart between July and September 2020. So first thing to note, look at how the range, magnitude of the candlesticks between the highs and the lows. Look how the range narrows. So you see the candlesticks generally become smaller as the trading range narrows. This is a signal where traders are either cancelling each other out or more likely they're just sitting out altogether. Now the reason for that is when the trading range narrows like this, it's really difficult to predict which way price may break out. So the uncertainty results in the volatility reducing as traders step away and wait to see what happens. It is a 50-50 at this point. And what usually happens is traders come back to the market once the break happens. So guys, which way do we think this is going to break out? Drum roll please. Should we find out? Look at that. So the move broke to the downside. Look at how big the move was on the size of the candlesticks. All of a sudden the volatility is back and traders begin to play the break. One thing to note here is whichever way this pattern was going to break, it could have gone either way. The move that followed was always going to be big. You usually get a big move once a break happens regardless of direction. So the wedge and triangle formation is almost like the calm before the storm. Now let's have a look and see how traders can play a breakout of a triangle formation. So this is a Bitcoin chart. So we're looking at the daily chart from December 2020 to Feb 2021. So the first thing to note, similar to the silver chart, look at the trading range of the candlesticks. You can see particularly towards the end of January how the trading range narrows significantly. This is a sign of uncertainty as traders step away and wait for a price to break out one way or another. At this point, it's all about speculative money that's really driving the move until it breaks out. So look how many attempts you had to break to the upside. You had as many as 6 attempts to break during January to the upside, which all failed. And you also had 3 attempts that failed to break to the downside. Now, price did eventually break out to the upside at the end of January. A retest of this break occurred before volume came back. And price did really surge away from this wedge formation. So rather than speculate here which way price will break, the clear signal was to buy at the start of February on the retest. That was the signal to enter Bitcoin for the leg higher that came after that. So you can see how wedge formation can be used here to trade a breakout. Hopefully you found this video useful. As always, if you find the content useful, do subscribe so you don't miss any future content. Thanks again for watching. Take care folks.